Good morning, you're watching Market Cafe on ET Now with me, Shreyanshi Singh and Sashi Sharma, and this is the show where we get you highlights from everything that is happening across the country as well as the world, tell you which stocks you should be keeping on your radar bright and early this morning as well. And let's kickstart the show with just that, because we do have to look at the Wall Street at this point.
Well, yes, and not that great global cues coming in at this point in time, Shreyanshi. A very good morning to you, first of all, and to all our viewers. Once again, a day in correction. What we have seen for the US markets, it was Dow Jones, which was down over 400 points. S&P 500 as well as Nasdaq too were seen to be declining, and it was S&P 500 that marked the 10% fall from those February highs. And definitely, given the correction, there is some uncertainty and concerns regarding the recessionary fears, as well as let's see how the tariff war takes away, because yes, indeed, yet another day of so much of flip-flop when it comes to the tariffs, because just yesterday it was Donald Trump announcing that despite 25% tariff on Canadian steel and aluminium, he will be increasing that to a 50% mark, keeping in view that Canada actually levies 25% duty on all the electricity that is exported to the US. But now, in the latest, we also get to know that it was White House trade advisor that has said that Trump would not raise the tariffs to a 50%. However, the 25% tariff, the blanket that he has already announced to the steel and aluminium commodities, would still go into effect on Wednesday. So much of news flow around that tariff flip-flop. But other than that, well, of course, investors are awaiting the consumer inflation report due Wednesday. So all in all, what we are seeing is that yes, indeed, there was a correction in the US markets yesterday, but for now we are seeing a bit of a rebound when it comes to Dow Jones futures. But on this US correction, we earlier caught up with market expert Sunil Subramaniam to get his insight on Wall Street route and if he believes the market sell-off will continue or not. Let's go across and listen in.
Market expected a strong economy, and now it's not going to be that strong. So the market is going to correct because those were in the prices. So I see this correction in the market lasting a little bit longer. The market is very surprised with the fact that the negatives are coming in far earlier than those positives are looking. And the market is definitely going to continue to be soft until there is clarity. Markets don't like uncertainty. And this uncertainty, as long as it lasts, the market doesn't have a rope to cling on. It is going to be very, very volatile.
Or rather, in a world where as far as tariff policy is concerned, that ultimately resulted in losses for all three of the major averages. Let's also take a look at oil prices then. On that note, oil prices fell for a second day in early trade on worries that US tariffs on Canada, Mexico, as well as China would slow economies around the world, also hurt energy demand. That's been a concern for quite some time now. And you do have OPEC Plus that is also ramping up its supply. That ramped up supply is also going to be kicking in from the month of April. Now, when you take a look at price movements, Brent futures are looking at a fall of 29 cents or just about 0.4%. $68 a barrel is the kind of level that you're looking at as far as Brent is concerned. Even when you take a look at WTI, US WTI lost 36 cents or 0.5% thereabouts. $65 a barrel is the kind of level that US WTI maintained. Not much of a good move coming in there in terms of the losses. But when you take a look at some commentary that has come out, you do have US President Donald Trump's protectionist policies that have roiled markets across the world, with Trump also imposing and then delaying tariffs on his country's biggest oil suppliers. And Canada and Mexico are the oil suppliers in question, while also raising duties on Chinese goods. So that largely is the backdrop that all of this is against. You do have Canada that has responded with tariffs of its own. Even Mexico has also retaliated. So that largely is the backdrop that all of this is against. But you do have oil prices down for a second straight day. Let's really see how this week, the rest of this week, pans out for oil prices, Srishti.
All right, so seems like a news-heavy day as well as an event-heavy day indeed, because there are a lot of cues to be watched out for. When it comes to the Indian markets today, we will have the AMFI data. Let's see how that pans out. Industrial production number will be out, as well as CPI will also be key to watch out for. And from the US markets, they will also be releasing the CPI number. So let's watch out for that. And Japan will come out with their PPI number. In some of the global earnings, it's Porsche that will come out with the earnings. So all eyes on that. And back home, watch out for Hutco because the board will mull further fundraising plans. So let's watch out what the decision is. And some of the other events, it's SpaceX to launch Crew 10 missions to International Space Station. So these are the few headlines that we are looking out for.
Alright, then moving on, let's get you some more news and headlines. A slew of headlines from the West this morning. Ontario Premier Doug Ford has announced the suspension of his province's planned 25% surcharge on electricity exported to the United States. Now, this after the United States Commerce Secretary Howard Lutnick has agreed to renew trade talks between the two sides. Ford, in fact, has said that he and Lutnick had a productive conversation about the economic relationship between the United States and Canada.
But meanwhile, US President Donald Trump backtracked on his plans to double US tariffs on Canadian steel and metal imports to 50% just hours after threatening them. Now, tariffs of 25% are still going ahead and will take effect from 12th of March. Now, the move comes after the Premium of Ontario suspended new charges of 25% on electricity that it sends to some northern states in the US hours after Trump threatened to sharply increase his tariffs on the country.
Alright, then moving on, big headline from Salesforce coming in this morning. The company has announced plans to invest $1 billion in Singapore over the next 5 years. The cloud software giant, in fact, said that the investment is designed to accelerate the country's digital transformation and the adoption of Salesforce's flagship AI offering, Agentforce. In fact, the company also said that Agentforce can help Singapore rapidly expand its labor force in several key service and public sector roles at a time when the country is grappling with an aging population and declining birth rates.
But shifting focus then, global EV sales rose by 49% in February year-on-year to 1.2 million. However, researchers have said that the figure was distorted by the timing of Chinese New Year. Because of the timing of Chinese New Year holidays this year, China recorded a yearly increase of 76% in February and of 35% for the first 2 months of the year. Sales in Europe were up 19% in the month compared with a year earlier, while sales in Germany are up 40% in the first 2 months of 2025. But meanwhile, North America's EV sales grew by 17% in the month from a year before.
Alright, then let's move on to some key geopolitical updates. Then Ukraine has finally endorsed an American proposal for a 30-day ceasefire and agreed to immediate negotiations with Russia in crunch talks in Jeddah after 3 years of grinding war. In fact, the positive response from Ukraine prompted the Trump administration to lift the freeze on military aid. In Washington, Trump said that he was ready to welcome Zelensky back to the White House and may speak to President Vladimir Putin this week as well.
Alright, but with this, viewers, it's now time to slip into a very short break. Don't go anywhere. We'll be right back with more, but on the other side.
Welcome back. You're watching Market Cafe on ET Now. Let's get you some more news and updates then, and let's talk about Bharti Airtel because that is the one that is shooting for the stars, and quite literally so. The telecom giant, in fact, has inked a game-changing partnership with Elon Musk's SpaceX to bring Starlink's high-speed satellite internet to the country. Now, in a country where patchy connectivity still plagues remote regions, this move could be a game changer, a digital revolution as well. My colleague Sumit Chaturvedi is joining in with some more details. Sumit, take us through all of these details that are emerging when it comes to this collaboration.
Indian telecom service provider Bharti Airtel and Elon Musk owned Starlink, they have joined hands to provide satellite internet services in India. In a statement issued, the companies have announced it. However, it will be only happening after the Starlink gets all necessary authorizations and approvals in the country. So in a way, both giants are coming together. It can be seen in the light of India and the US also coming together in technological space. In a statement issued, both companies said they will complement each other, and it is going to, by integrating Starlink into its offering alongside existing partnership with Eutelsat OneWeb, Airtel will strengthen its ability to provide nationwide coverage, particularly in underserved areas. So it's from long time that Starlink is trying to enter into the country. However, many times both Indian players and foreign players, including Starlink, they are against each other. How to pay for these services or how to pay for the spectrum. But this time, Starlink is going to make an entry into the country. Remember, Bharti Airtel is owned by Sunil Bharti Mittal, and he's one of the biggest czars of Indian telecom space. On the other hand, Elon Musk is, we can say that, a czar of technology, EVs, and even satellite communications. So here they are coming together and charting a course to come and capture this market in India. It's also, well, Gopal Vittal, MD of Bharti Airtel, said working with SpaceX to offer Starlink to Airtel customers in India is a significant milestone and further demonstrates our commitment to next-gen satellite connectivity. So in a way, it showcases how Airtel is also treating this important development.
Well, thank you so much, Sumit, for getting us all those details. But we also spoke with Jaspreet Bindra, and in chat with ET Now, he spoke on how Airtel's tie-up with Elon Musk SpaceX to bring Starlink internet in India could be a game changer and what it could mean for Jio. Let's go across and listen in.
I think Mr. Mittal has pulled a rabbit out of the hat. None of us were really expecting this. If you remember, until even last week or last to last week, the Indian telecom operators led by Airtel and Jio were at and Starlink on the other side were at each other's throats. There was a 6-hour meeting with TRAI where they could not agree on things, and now suddenly this. So I think it's a fantastic deal for India, for Airtel, and for Starlink. Jio, obviously, I think would be kind of regrouping and thinking about what its play here can be, given that this is a very significant strategic step that its competition has taken, which could give them a huge advantage in connecting parts of the country which was almost impossible to connect using conventional technologies. So I definitely think Airtel is at an advantage here over Jio.
All right, then Bharti Airtel has pulled out a rabbit out of the hat. That's the word coming in from the expert. Let's move on then, get you the latest in the Haldiram Snacks food stake sale. ET Now sources suggest that Temasek may be looking to acquire about 10% equity in the company, which will be merged post the deal is done. Anurag Joshi is standing by on the phone line with some more details. Anurag, thank you so much for joining us bright and early this morning. Take us through all of these details.
Singapore government-backed investment firm Temasek is set to buy a 10% equity stake in Haldiram Snack Foods. Now, Haldiram Snack Foods is a combination of the snacking business of the two factions of the Agarwal family, which is the Delhi and the Nagpur factions, and the factions had been speaking to various suitors to sell an equity stake. Initially, they wanted to sell a controlling equity stake, but last year when the deal had almost collapsed and there was no headway, they chose a compromise and they decided to go and sell a minority equity stake. And when they decided to sell a minority equity stake, and that's when Temasek became the front runner. And mind you, the other contenders in the deal included Blackstone Consortium, and also there was a binding bid from an investor called Alpha Wave Global. Temasek will be buying a 10% equity stake in the company, and this will be at a $10 billion valuation. Now, the idea is that the Delhi faction will be owning about 55% equity stake in the company, and the Nagpur faction owns the remaining stake. So the stake sale to Temasek will be happening out of this stake that is owned by these two factions in the company right now.
All right, thank you so much, Anurag, for getting us all those details. So finally, this deal is through, and along with that, let's watch out for some of its peers like Pratap Snack as well as Bikaji in today's trading session. But moving on to another story, wherein SEBI introduced new framework for faster rights issue process and directs that the process should now be completed within 23 days from board approval. My colleague Ankur Mishra is here with more details. Take it away, Ankur.
Market regulator SEBI has issued new process for faster rights issue process. Currently, the timeline is around 55 days, which is set to be reduced to 23 days if you apply this new process. As far as the application is concerned, on day 0, board of directors will approve the rights issue, and considering from 1 to 7th day the filing of letter offer with stock exchanges and SEBI can happen. Now 8th day, that is the next day, record date fixed, rights entitlement will be credited, and next 2 days the dispatch letter of offer, advertisements that can be published in the newspaper, and the rights issue can be open for subscription from 14th day, that is from 7 to 30 days, and this whole process will be completed within 23 days. The rights issue with this process can be completed within the timeline. Now all in all, the new application of norms will happen from 7th of April, and the whole market participants will follow the new process and can make adjustments accordingly.
All right, thanks Ankur for getting us all of those important details. Let's move on to an ET Now exclusive. Then the Power Ministry completes industry consultation on a manufacturing scheme for the transmission sector. In fact, various equipments that were used in the transmission sector will be manufactured under this particular scheme. Prakash Priyadarshi filed this report earlier. Take a look.
The Power Ministry has completed industry consultation on a manufacturing scheme for the transmission sector. A very significant development coming in. Various equipments used in the transmission sector will be manufactured under this scheme. We had reported about this development few months back. Now sources are suggesting that the Power Ministry has completed industry consultation and moving ahead with the proposal. Along with that, manufacturing of open and underground transmission cables will be part of this scheme. In fact, financial incentives will be provided to the companies based on their manufacturing capacity for a certain category of equipments. The Central Electricity Authority, that is CEA, has been told to prepare draft proposal. In fact, the final proposal will be prepared by the Power Ministry after incorporating CEA's input, and then that will be presented before the empowered group of secretaries on PLI. That's an important development coming in. Sources are also suggesting that the overall size of the scheme could be around rupees 8,000 crore to 10,000 crore as per the initial proposal, and that will be launched under the National Manufacturing Mission announced in the budget.
Well, thank you so much, Prakash, for getting us all those details. But with this, viewers, it's once again time to slip into a very short break. Don't go anywhere. We'll be right back with more.
Hello.
Welcome back to Market Cafe, and yes, of course, when we see yesterday, it was a good recovery for Nifty 50 from the day's lowest point, but Bank Nifty was definitely languishing after the sharp fall we have seen in IndusInd Bank. But how is the data panning out within the F&O space? Let's get a snapshot of that, and for this, let's go across to Ansh to get more details on this one. Ansh, over to you.
Well, in previous session, Nifty has given very good recovery of more than 150 points of day's low to close slightly in green, but it trades below that key resistance of 22,600 to 22,800 for fourth consecutive session. We need to get back above that to be on a positive front. Whereas in index option, we are seeing put writing happening at that 22,400 strike, indicating option traders expecting some support around this level. In the previous session, Nifty actually took a recovery from a 22,300, so 22,300 to 400 is the level where which can act as a cushion to the falling prices. Now, if you talk about Nifty Bank, then Nifty Bank actually declined for third consecutive session, and it has been facing very strong resistance at that 48,800 mark. Whereas in index future as well, we are seeing that open interest has gone up by more than 5%, indicating short buildup, which is also a negative sign. Also, if you talk about the index future position, then in previous session we saw that FII actually added some long by around only 200 contracts, but at the same time they added shorts by around 3,000 contracts. So net to net basis, they added around 2,800 contracts on downside. Whereas if we talk about retail's position, then yes, they added longs by around 12,500 contracts, but in contrast to that, they added more shorts by around 15,800 contracts. So net to net basis, they added around 3,300 contracts on downside. So both FI and retail seems getting cautious in the previous session.
Absolutely. Thanks, Ansh, for getting us the futures and options roundup. But it's time now to get you the list of stocks that you should be keeping on your radar bright and early this morning? In fact, Varun is standing by with just that.
Well, good morning. So let me start with some of the important events that you need to keep an eye on, and that's Amphi data that you will get somewhere in afternoon. So keep an eye on that. Other than that, it's the IIP data for the month of Jan and CPI data for the month of Feb, which are going to be, come. So keep an eye on that as well. Keep an eye on Godrej Agrovet because the board has approved acquisition of around 48% equity stake in its material subsidiary, that is Creamline Dairy Products. And for execution of share purchase agreement, the company would be investing around 930 crores. Keep an eye on TCS because the company has acquired Darshita Southern India Happy Homes Private Limited in the commercial real estate industry, and the acquisition of land which is held by the entity to serve a delivery center. The overall consideration for this acquisition is around 2,250 crores. And also keep an eye on PB Fintech because the company would invest around 696 crores in its arm, that is PB Healthcare Services.
All right, thank you so much, Varun, for getting us all those details. And top global voices remain bullish on India, when Chris Wood calls India the best structural story, while Jim Walker says that the policy stability makes it a standout time to double down. Florian Neto says India's fiscal path as strong but finds Smith's pricey. Meanwhile, Vivek Paul bets big on India's AI pivot. Let's go across and listen into them.
Given India's already corrected a lot, it will fall less. But the key market that will outperform if the US market's going down, well, there'll be the two markets which have got a chance of outperforming in the nearest. Well, they have been outperforming year to date, and they can do so more, I would say, are China and India. So China, I've increased my position in China in the last few months. China bottomed last September at about 8 times earnings. And although China is not booming, the Chinese market can double just on Chinese consumers going from pathologically cautious, which is what they were last year, to moderately cautious.
The state of policy generally, so monetary policy, fiscal policy, and exchange rate policy. India looks to, I said this in a report that went out yesterday to our clients, that India looks better to me now than at any time in the last 30 years in terms of policy stability. You know, I've said to clients this week that this is the time to absolutely double down on the long on India, go much, much longer. And although worry about the valuations in the Indian stock market, my view is that economic growth is going to take off from here. And those valuations will be very quickly supported by corporate earnings and by economic growth.
We do feel that the valuations that we are seeing on mid-cap is still a bit expensive compared to what we are seeing from an earning revision ratio on the market. Of course, you can selectively find some stocks, but in general, we do feel that now on the large cap, most of the resit on the valuation has been happening already. The Chinese rally is a tactical rally for now, in our view, but it can become more sustainable. So the question is on the leadership. And we do feel okay having an overweight on India and an overweight on China today in our portfolio. The overweight on China is not sustainable yet, and earnings there is not good enough yet. Okay. So there is good prospect for Chinese companies to deliver more because the business environment is evolving.
Structural opportunities are sizable in India. So if we were thinking for anybody with an investing horizon 5-10 years out, we would be building portfolios today using our core IP where you'd hold a greater allocation than a benchmark weight. And that's true for the bond market, that's true for the equity market as well. And that's a function of structural dynamics being positive for India. But on the structural side, the demographic sort of forces underpinning India are really strong. Most of the developed markets, China, are going to experience a shortfall in working age population over the coming 20 years. India's going to experience a big gain in working age population in the coming years. And you think about the geopolitical dynamics that we're in now, a multi-aligned country such as India is likely to benefit from that sort of environment more in the future.
All right, so those were the top global voices, but back home onto the stock-specific action. Let's watch out for Tata Motors specifically because the company had an analyst meet, and in that key commentary is coming in on the JLR EBIT margin front, because after 9 months of the data for FY25, there was a bit of an uncertainty around whether or not JLR EBIT margin target of 8.5% will be met. But in the management meet, in the analyst meet rather, the management did sound confident that they are on track to achieve that same number and be net debt free on the JLR front as well. Though JLR FY26 volumes could be a little stressed due to the discontinuance of the JLR models, for India business, Tata Motors is confident of achieving that double-digit margin for their PV business, and they're also highlighting that some of the key launches are expected in this particular year from the likes of Curve as well as Sierra. Other than that, they also highlight that for the SCV segment, that may see some revival. And onto the global scenario, especially the concerns related to tariffs, Tata Motors does say that in case of tariff being imposed by the US on Europe, because Tata Motors, what all sales that they do in the US is exported from the European markets, JLR will have to offset the impact through price hikes as well as cost savings. Brokerages have come out with their note. Let's also tell you that Elara does maintain their buy but have cut the target price to 872 rupees from a 909 earlier. They are paring the EV by EBITDA for CV and PV segments on the back of the muted outlook, while Nuvama maintains their reduced rating, target price of 720 rupees, and the build revenue and EBITDA CAGR of just 2% for FY25 and 27. So a bit of a mix, what we can say, takeaway coming in from Tata Motors, though the company is confident of achieving their FY25 numbers, but the outlook doesn't seem that great.
Alright, then Tata Motors is the one to watch out for. But with that, completely out of time on this edition of Market Cafe on ET Now. Thank you so much for tuning in.